Okay, so important. This is a chart of Bitcoin, obviously, candlesticks. But the thing you need to know is that this is a liquidity indicator that I'm starting to use. I'm going to develop a new liquidity indicator, a custom-made liquidity indicator. I already have the plans on my head, but I need to write it down the code before I can do this, because this relies on like doing a lot of computation before I can come up with a better liquidity indicator. But this one is pretty good. And this is using central bank liquidity. I call it CBL, central bank liquidity indicator. This only looks at what central banks are doing. It does not look at private credit. If you go on social media, on Twitter, especially on Twitter this week, I mean, everybody just unleashed hell on the Zero Hedge account on Twitter, because he posted this chart that I think we're going to get to at some point, saying that Bitcoin's fair price is $250,000 because of how strong M2 has been. So this is the narrative, and M2 has been growing by leaps and bounds. It is at all-time highs. Meanwhile, Bitcoin has been stuck. And instead of revising their model and saying, hey, maybe that doesn't work, what I've seen a lot of people do, and luckily it's not everyone, and a lot of people I highly respect are not falling for it. And these are not Bitcoin skeptics, because the Bitcoin skeptics have always said, no, there's nothing to M2. Liquidity skeptics, I know a few of them, have always said, no, liquidity doesn't work. But that doesn't really explain why it does work sometimes. Liquidity indicators do work. Now, this liquidity indicator is moved forward by 84 days. That is 12 weeks. All right. And so what I've noticed is that there's starting to be this rift between not the skeptics, but people who are into Bitcoin, they're into liquidity analysis, and they're not sold on M2. I count myself among those people. I was never really sold on M2 because M2 is too broad a measure of money and credit. And it just didn't make a lot of sense. Now, it makes sense that you would use M2 to predict Bitcoin. It makes sense that M2 would affect the price of financial assets. I do think it has a very strong correlation with the stock market, for example, but crypto specifically. And again, this is just empirical analysis. This is just looking at charts. I haven't even done the math yet. I've done some, but it's hit and miss. Hopefully, by the time we do the next AMA, I'm going to have like a solid indicator for liquidity that incorporates all manner of credit creation, central bank and private. But so far, this CBL, what I call it, CBL, central bank liquidity indicator, is much better than M2. It is the only liquidity indicator that I know of that topped out on July 14, retested the high. And again, this is not July 14 actually, because this is displaced by 12 weeks. But I say July 14 because I'm not gonna do the displacement in my head. This is actually this high is actually in April for the actual central bank liquidity. But if we move it forward by 84 days, it is in July, on July 14. That matches one of the exact tops in Bitcoin. In fact, I was just making a video for Weiss this morning, and I was showing how there's a double top in Bitcoin. The all-time high, if I hide this liquidity indicator for a moment, you notice that this is kind of a double top. We have the first high here on July 14, and we have a secondary high on August 14th, a month later. So a month later, we had this double top. Funny enough, this is quite interesting. We did not have July 14 as an important high on the model's forecasts. However, July 14 or 13, depending on which day you want to use, if you use the close or the intraday high, the wick of the candle, that one did show up on our forecasting model. Now, it showed up on August 11. But remember, there is a margin of error here. These can be off by about 4 days. And so, and also, technically, and I went into this, I think I went into this last month. Technically speaking, we do have a high on on August 11 that was retested on the 13th, and the rally failed. So Bitcoin tried to rally above this high on the 11th. It tried to rally above it on the 13th of August. And by the 14th, the next day, it crashed. It crashed significantly. This is the worst sell-off we've had over the past in the past couple of months. So it cleared rejection of resistance. So this region here at 120, 125 was clearly acting as resistance. And even though we didn't have this as a high forecast on the forecasting model, we did have this one, the 11th. You can say it's the 11th and then it was retested. You can just say it was the 13th, and that's within the margin of error. In fact, the forecasts have been spot on this year. They've been closer than I've seen them in the past. Sometimes they're not as close. Sometimes the highs are they can be up to 5 or 6 days off. I would say 90% of them are within 4 days, but actually they can be off by a few more days. That's what I've noticed. But going back to liquidity, this is the only indicator that uses liquidity because it recognizes, yeah, liquidity does play a major role, and it's major. I think I actually honestly think it is the #1 factor, save for a few things. We went into this last month. I have the videos on YouTube if you want to check them out. There's only 2 occasions where Bitcoin did not follow liquidity in this bull market. That started in November 2022. One is ETF approval. So you have the rumors of ETFs being approved, and then confirmation of ETFs being approved. That time period, liquidity was going down, Bitcoin was going up. The second time that Bitcoin did not follow liquidity is after Trump got shot, the failed Trump assassination attempt. Then we saw a 2-week divergence between liquidity and the price of Bitcoin. Liquidity went down, or was actually going down during that time. This is early to mid-August. Liquidity is falling during that time. Bitcoin shooting up, but only for those 2 weeks. And it's funny how it works, because he's speaking at this Butler, Pennsylvania. He's doing the speech, failed assassination attempt. Bitcoin begins to rally, and then as Trump gives his speech at the Bitcoin conference, I think it was in Nashville in 2024. He was giving a speech promising the creation of strategic Bitcoin reserve. Good luck with that. Still waiting to hear on news of that. I don't think it's going to happen anyways, but whatever, I digress. As he's giving the speech, Bitcoin falls back in line with liquidity, and then the two have been in lockstep ever since. Bitcoin has not deviated from liquidity since that time, since early August of 2024. What I'm trying to emphasize here is these divergence events of Bitcoin doing something that doesn't show up in the liquidity charts. They're rare. These are rare events that don't last very long. So that's where we're at. Now, which measure of liquidity? Well, it's this one that I'm showing you here. It's central banks. This is just central banks. It actually uses the main central banks. I can show you here what it uses. It uses the Fed, DGA. It subtracts the Treasury general account. It uses the reverse repo facility, which is it's empty now, so we don't have to use this. Then it uses the central bank, the People's Bank of China, Bank of Japan, and other. It's like Sweden, Denmark, and a bunch of others. Minor developed market central bank. I think Brazil is there too. I don't know. It doesn't make such a big difference. The 2 main drivers of central bank liquidity are China and the Fed. Mostly China, actually, not the Fed. Mostly China. It's funny how it works now. They are more influential, at least when it comes to crypto. Far more. Could be because the Fed has been steady and on hold for the most part, and China has been all over the place. Like sometimes they withdraw liquidity because they want to strengthen the currency, and when the currency gets a little stronger, they print money like crazy because they have a massive deflationary bubble that's a massive real estate bubble that's in slow control demolition mode. So it's like a slow decline, just like we saw in Japan in the 1990s. Anyways, I digress again. The point is, mostly the central bank liquidity is being led by the Fed and China. And it's been flat since, again, July 14.